Candlesticks. What can you say about the length of the body of the candlestick number 1, number 2, and number 3? Do you notice something? And what happens after that? The strength of the candlestick, right? Strong bullish candlestick. The strength of the candlestick, what? Strong bullish candlestick. Then this one now, it reduces. So the strength at which the market is pushing up is going to determine if it's going to continue going or if it's going to stop. Candlesticks are very important. Once you're able to understand what is happening with the candlestick, then you're going to understand technical analysis very easy. You're going to understand entries very easily. Because this candlestick, you're seeing that, okay, there's a strong buy to the upside, there's a strong buy to the upside, then this one now, it dies down, right? Immediately it dies down, now the next candle is a red candle. What does that signify? The uptrend has ended at the beginning of a downtrend. Now, this, when you see this kind of candlesticks around a support or resistance level, right? For this instance, it's around a resistance level. When you see this kind of movement around a resistance level, that's your confirmation that that level is going to be respected and we are going to go down. When you see this kind of movement on a trend line, a downward trend line, that's a confirmation that, okay, the market is rejecting this trend line and we are going to go down, right? Candlesticks, very important. So, like I said earlier, you need to, first of all, know how to understand the candlesticks. Because if you understand the candlestick, just by looking at it, you know what's happening. You get? Just by looking at it, you know that, okay, buyers are dying down and sellers are getting in. So you need to understand candlestick first of all. Now, this is an example here. First touch, second touch, as it is approaching the trend line, it dies down. As the trend of the market dies down, we are looking for our sell opportunities. These are the things you need. Because at the end of the day, how do you make money in this market? To buy and the market buys, or to sell and the market sells, right? So you need to identify how to know when the market is going to buy or when the market is going to sell. 4 common mistakes in drawing a trend line. Drawing trend lines through an obstruction. Now, like we said earlier, the first and the second touch is very vital. It's very important, right? Never you draw a trend line to cross across a body of a candlestick like this. So there should be no there should be no obstruction between point 1 and point 2, right? As you draw a trend line, no obstruction between point 1 and point 2. This is not the way to draw a trend line. Point 1 and point 2 must be clear and no obstruction in between. So that's the first mistake you have to avoid. The second mistake, drawing through wicks and bodies of candlesticks. That's the second mistake you don't have to make when drawing a trend line. So when you're drawing a trend line, it should not pass like this in between candlesticks, no, right? It has to go below on the wicks of the candlestick. So here is a wrong trend line and this right here is the correct trend line, right? The third mistake, not drawing a new trend line and keeping a breach trend line. Like I said earlier, you can draw a trend line today and tomorrow that trend line is no longer valid, right? You draw a trend line today, the trend line respects today, tomorrow the trend. Right here, we have a breach trend line, right? Now, when we go down, you're going to see that we have another breach trend line, which some people consider as breach trend line, but it's not a breach trend line. Why is this one considered a breach trend line? You see that the market respected this level, 1, 2, it came here, break this trend line, no problem, right? The problem here started when the market breached the trend line back down, then breached and went up again, breached and went down, right? Now let's take for example, if this market came here, right, and breached, if the market came like this, breach this trend line and go up, then come back and respect this trend line to go up, right? Did not break to go back down. It would have still been a valid trend line. You get the difference? But because it breached and went up, it came back, it did not respect this trend line from the upside. It breached and went back down again. So that trend line is no longer valid. So what do you have to do? You have to remove this trend line and draw a new trend line, right? So the mistake here is that you allow this breach trend line. That's going to be the mistake, right? So once the trend line has been breached, you draw a new trend line like we have here. From this high, you first of all identify your highs, right? Identify the first high, identify the second high, identify the third high. Now, you see that on this particular one now, The market respected, the market respected, the market respected. What happened? The market breached. But when it breached, what happened? When the market breached, it came back, retested that level and went up. So this trend line is still valid. Why this one is no longer valid? You get? Did the market break the two trend lines? Yes, right? But now when you break the two trend lines, this one is valid because it respected the trend line from the upside, which therefore means that this trend line is still valid. If this trend line was not valid, it will come down, you will not respect that level again, right? You come and go down. So it respected that. So this one now, the problem is that it came down, it did not respect this one again, so it's no longer valid. It went down, break went up, break went down, break went up, like nothing is here. There's no key level there, there's no trend line there, so that's why we consider that one not valid. And the last mistake, join a trend line that are not touching the peaks or the troops, right? Join trend lines that are not touching the peaks or the troops. You see that right here. If you draw your trend line, if you draw a trend line from here to here, you discover that this trend line, right, troops not touching, or the lows are not touching. Right up here, these are our peak years, but the trend lines are not touching. Now this is what is going to happen to you when your trend lines don't touch. You might likely miss an entry. You get? For example, if you see right here, you see that we have our lows, which you will identify very well. Now you have identified your lows. What is left for you? To just draw the trend line. But you see that this trend line did not touch this other troop. If you had touched this other troop, it should have gone up straight like this, right? But it left from here, then it went down, did not touch this other one, and did not even touch this other one. So you see that the fact that you did not draw the trend line to touch this point 2, you have missed an entry on point 3, right? You have missed an entry on point 3 because you are expecting the market to still come down to touch your trend line. But you see that the market has already respected where the trend line had to be because you do not draw the trend line to respect and touch the troops very well or the lows very well. You have missed this entry and probably missed this other one up here. You get? So always draw your trend lines to touch from point A to point B, then it goes up straight to avoid missing an entry. You get? Now, strong and weak trend line. I already explained this one at the beginning. What did I say about the strong trend lines? Strong trend lines and gentle sloping trend lines, while weak trend lines are the ones that are steep, right? So the more times price come and touch, and then it is made to obey a trend line, that determines the strength of the trend line. So the more time the market touches the trend line, that determines the strength of the trend line, right? Now, if the price is made to obey a trend line more than once, consider that a strong trend line, right? Why are steep trend lines most often weak or unreliable? The market cannot be sustained at this steepness for a very long period of time. So this right here, point 1, point 2, it breaks already, right? Because it is steep. Point 1, point 2, it breaks already. Now if you look at point 1, point 2, point 3, it breaks already. But if you look at a gentle sloping trend line, you see that it does first touch, second touch, third touch is going to respect, fourth touch is respect, fifth touch is going to respect. Look here, a gentle sloping trend line. First touch, second touch, third touch is going to respect, fourth touch is respect, and the fifth touch is still going to respect. But when it's steep, then you know that it might likely break. Now, how does this help you? It helps you in such a way that if you have a trend line that is steep, you know that if the market respected that trend line 1 time, 2 times, the third time it might likely break. You are conscious. It keeps you to be conscious, right? Of the fact that, okay, this trend line is a steep trend line. So it might likely not respect again. You get? With that now you're conscious. You will not rush to enter a trade on a steep trend line because it might likely not respect. But on a gentle sloping trend line, you know that, okay, gentle sloping trend lines are obviously strong. So on the third touch, yes, you will normally still respect on the third touch. And on the fourth touch, and maybe it's around the fifth touch that it might be weak, right? So basically what I've just explained, the importance of knowing the steep and the weak trend lines. Now, support and resistance and how they move in accordance with trend line. When we draw trend lines, we are operating on 2 very important concepts, right? Support and resistance. So when we are drawing our trend line, we are still working on the support and the resistance concept. Trend line, whether up or down, when drawn on a chart, indicates where price is most likely to find a diagonal support or resistance in the future. Now we'll just go down to look at some examples. You see that we have our trend line here, first touch, second touch, right? It goes down. Now, if we were to draw our support and resistance, we are going to see that we have our resistance levels, right? The market resisted this level and went down, resisted this level and went down, resisted the same level and went down, right? So at this point, you see that while drawing our trend lines, we are most likely using support or resistance levels. So you need to pay attention. There are times where when you draw your trend line, or there are times where you're using support and resistance, always have your trend line drawn, right? Once you have your trend line drawn, you're going to see that, okay, there's one point where we have a trend line and we also have a support or a resistance. Down here, we have support levels. The market will expect a resistance, it breaks, come back with test, goes up, support level, and it goes up, right? So you see that our trend line also passes from point 1, point 2, then it meets on point 3, and that point 3 is also a support level, you get. Now, the most interesting one is this. Combining trend lines, support and resistance with horizontal support and resistance for trade setups and entries. Now you get the best trade setups where you combine support and resistance alongside with trend line. You get a valid, a good entry. So right here we have our trend line, first touch, second touch. On the third touch, we had a resistance level here. When resistance level breaks, what happens? When resistance breaks, resistance becomes support. So the market breaks this resistance level and come back, we test this level now as support, right? So at this point we have our support. Why those who are trading based off just support and resistance are entering their trade here? You who is trading based off trend line also having your third touch at this point, you have your entry. It makes it more solid, right? We have another example down here. First touch, second touch, right? The market will expect 1, 2, and on the third touch to the downside, you see that it respects this level as a support level, right? Respect this level as a support level, went up, respected this level as 0.2, went down, break, come back and retest, right? As you come back and retest, you have an entry to the downside. Now, what do you notice about trend line? The good thing with trend line is once you have trend line in mind, you are always going to trade with the trend. You're always going to trade with the trend. That's the importance of trend line. That's why if we are looking at just support and resistance, there are times you might be trading against the trend, right? But once you always draw your trend line, you're always going to see that you're always trading with the trend, and it makes you more accurate. Unlike somebody who is trading maybe based off just support and resistance, based off those key levels. You might be placing you might see a small, for example, you might see a small support level here, or you might see a small support level here, and you go, you're trying to buy. You see that the bigger picture is down, right? But once you have your trend line, you're going to be aware of the fact that, okay, I should be trading following the trend. And as you're trading following the trend, you're going to have bigger opportunities and avoid hitting stop loss most of the time. So these are just basically examples: support levels, resistance levels. We have our resistance level here, then we have our trend line, right? So they come and meet in the middle, right there. So this particular lesson is just for you to be aware of the fact that always draw your trend line, even if you are using support and resistance. Always draw your key levels of support and resistance if you are using trend line, right? So it guides you to trade with the trend, right? It guides you to avoid some short-term sells, or it guides you to avoid pullbacks because you trade the trend. If you are trading pullbacks, you might just place a buy, it goes a little bit, then sell. Now you might be asking yourself, it took long to pull back. It took long for you to see maybe $20. But now when it wants to go now against you, it goes against you quickly. Most people that always give this complaint are those who don't trade with the trend. Because if you are trading with the trend, most of the time the trend is always going to be your favor. So your profit is always going to be faster and more than your losses. But when you're trading against the trend, you're trading those pullbacks. The market wants to pull back a little bit to continue selling, you are going to take a buy. It pulls back a little bit, you see small profit, then it goes down, right? That's because you don't trade with the trend. So now, the trend is your friend. I think this lesson even, we have already explained it over and over and over already. But the most important thing I want us to start with tomorrow is identifying when a trend changes or when an uptrend changes at the beginning of a downtrend.